Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Trading TV. This is your stage to shine.
Hello, good morning, everyone. Good morning, and welcome to a new episode of Chat and Chart. This is the London session open, and this is your host, Saif Qaddoura. Hope we'll have a great analysis session. We had quite a Friday last week, huh? We saw a big drop in almost everything against the USD. We saw the euro suffer, we saw the gold sell off, and we saw a pullback in major US indices. Now, let me tell you why that happened. Mainly because of high yields and the expectations of higher interest rates to fight inflation. Because like the market, it's as if the market understood what happened during the week and understood the inflation readings on Friday. So we had a huge surge in PPI, which is the price, producer's price index, to 6% year over year, and we had also the CPI come in at 3.8%. So it's as if they didn't do anything for the past year. They didn't bring inflation down to 2.4%. It just jumped in a couple of months after the war. And as I keep saying, I believe that this pain is still not the worst or the worst pain. We're going to see more pain in the economy. We're going to see higher inflation, and we're going to see higher interest rates in the future. For me, I see that cutting rates this year is off the table. They're not going to cut any rates, and they might actually hike rates instead, not cut rates. So let's see what Kevin Warsh has in mind. He took office on Friday officially. He was voted by the Congress as a Fed chair on Wednesday. Was it Wednesday? Yeah, I think Wednesday. And then he officially took over from Jerome Powell on Friday. So let's see what this guy has in mind. Let's see what plans he has for the economy. Okay, so without further ado, let's get to the weekly high impact news calendar and go day by day and see what we have. Today we have nothing of high impact, so we start with Tuesday. We only have the GDP. Okay, 1 second. Guys, I'm trying to share my screen. My screen is gone. Uma, can you please help? Good morning, Pijus. Good morning, Meza. People in the backstage. Yes, thank you. So on Tuesday, tomorrow, we have the GDP coming from Japan. So the previous was 0.3%. The forecast is 0.4%. So an improvement in the quarterly GDP coming from Japan. Obviously, if this comes in higher, that's positive for the JPY, so negative for USD JPY, and vice versa. If this comes in lower, then it's negative for JPY and positive for USD JPY. All right, so we move to Wednesday. Wednesday, we have the CPI coming from UK, from Europe, and the CPI coming from the UK is expected to be lower than the previous. This is something I doubt. I highly doubt that it's going to drop because energy prices are going crazy in the Eurozone and the UK. So yeah, the previous was 3.3. I say minimum we're going to see 3.4 or 3.3. Definitely not a decrease to 3%. As for the Eurozone CPI, it's expected to stay unchanged at 3%. This might happen, or we might see a slight increase. So if those manage to come in higher than expected, we're going to see positivity on those pairs or those currencies, which are the GBP and the euro. If not, we're going to see deeper drops on both against the US dollar. And then we have the crude oil inventories. We are seeing that the inventories in the US are depleting really fast because of the supply shock and because of the energy supply shock, obviously. And we expect to see deeper and deeper shortages in the inventories, especially in the US and in other parts of the world. So let's see how this comes in. If it comes in like even worse than 4.3 as the previous reading, if it comes in worse than this, we're going to see a positivity on the oil prices. Because like it means that demand is outpacing supply and the inventories are not keeping up with the demand. So when demand is higher than supply, what happens? Price goes up. Okay. Finally, we have the FOMC meeting minutes. That's for the last meeting that they had last month. So we're going to see what they have. Was it on April 29th, I think? Yeah, so those are the minutes of the meeting they had last month. And I believe Kevin Walsh is going to speak on Wednesday. So, but it's not confirmed yet. That's why we don't have it on the economic calendar. But I think he's going to be speaking on Wednesday. Okay, Thursday we have the Philadelphia Fed Manufacturing Index, which is expected to come in lower than the previous. So that's a big contraction in the manufacturing or regional manufacturing sector in the US. And the initial jobless claims are expected to stay around the same levels, around 210,000 initial jobless claims. And the S&P global manufacturing PMI is expected to slow down a little bit, but still in the expansion territory. So above 50, it's still positive, but not as positive as the previous reading, which was 54.5. Next, we have the global services PMI. So it's expected to be slightly higher than the previous, still above 50. So it's still expansionary, but not very impressive. Okay. All right. Do we have anything on Friday? We do. We have the German GDP. So the German GDP is expected to stay unchanged at 0.3%. If it comes in higher than expected, then that's positive for the euro. If it comes in lower, then that's negative for the euro. That's pretty much it for the economic calendar. Let me see if you have any questions before we move to the charts. Do you guys have any questions before we move to the charts? Okay, so I guess not. Let's now move to the charts. Do this, and trying to share my screen, guys. All right. As always, we start with the DXY. So we go to the monthly because this month has 2 more weeks to go, like exactly 11 days. So 12 days if you include today. It's being positive so far on a monthly basis. Let's go to the weekly. Weekly closed very bullish. That's a very bullish candle here. So we'll see. As I told you before, we have a few levels that I'm waiting for them to break. So the 99.3 got broken on Friday and even this morning during the Asia session. Now, the next level that has to be broken for us to confirm the continuation to the upside is 100.6. So just to be safe, let's say 100.7. Okay, I'm placing my alert above this area. Once this breaks, we're going to see a deeper correction in gold, a deeper correction in euro, and a deeper correction in everything basically against the USD. Okay. Now, let me show you something interesting before we continue our usual. Okay, so here we have the US 10-year bond yields. Okay, so those are the government bonds, uh, 10-year yields. So if you invest in those, it's going to pay you, if you invest today, the yield is going to be 4.6%. Now, why is this number very important? And as you see, we do technical analysis for these. Mesa, this is your new project. So learn about the what's it called? The yield curve and about the treasury yields, and let's discuss. Okay, so now we've been in an uptrend since 2020, which is COVID, and now very recently, in March, we hit a low of 3.9%, and now we're up to 4.6%. So I'm expecting to see 5.5, 5.6% in the near future. So what does that do to the markets? Since gold is not a yielding asset, it means that whenever the bond yields go up, they become more attractive as a safe haven. So people ditch gold and go to the bonds. And there is a, what's it called? An inverse relationship between the yields of that bond and the bond price. So when yields go up, bonds go down. And when bonds go up, yields go down. So that's the negative relationship they have. The yield curve and the bond prices. Now, why does that happen usually? Because why is it going up? Simply because expectations of higher interest rate is back on the table, and now markets are starting to price in an increase in interest rates by the end of this year. So that's why the yields on the bonds started to rise, and of course, as a safe haven, that's what happens when yields go up. People go to the higher yielding asset, so they leave gold and go to bonds. But I believe the correction in gold is going to be just like transitory or very temporary. Okay. Hi Arif, how are you? Good morning. Okay, so back to the dollar. So what's going on with the yields? They're going up. What's going on with the DXY? It's also going up. So let's see. Let's see now what's happening. Okay, we go to the daily. So the daily chart shows us that we need to break above this level, which is a 99.3, and which we did. Let me remove those. Okay, so we broke above, but we need to close above for it to get confirmed. Okay. Now we need to clear this one out. Once this is clear, we have nothing to stop us all the way to 104, which is going to be very negative for everything against the dollar. Okay. Good morning, Yahya. Okay. So we go to the 4 hours real quick. Yeah, we're in the middle of a correction now. We might be ending this either here or around a 98.8. Okay, so it either like flips to the upside from here or it reaches 98.8. If it wants to deepen the correction, it could go to 98.5, but I think that's it, and we'll continue to go up from there. So yeah, we have a bias. The DXY is bullish for the week. That's pretty obvious. Now let's move to the euro. You guys remember my channel. So why did I draw this channel before it even hit here? Because this is the 61.8 Fibonacci retracement. So this is the golden area, and we did like one leg and then a correction to that leg, and now we're starting to go down. So on a daily basis, on the daily time frame, we closed outside the band and outside all moving averages. So we closed below all moving averages. That's a very bearish sign. So once we start to see a cross to the downside between moving averages, that's when the big move is going to start. But we have a level here in front of us, which is 1.16. That's a very important level. If you see here, the rectangle, the tight rectangle I drew here, look how much price reaction it caused. So let's see what's going to happen here. This is a very important level, and even this time it got rejected from it. So let's wait and see. But I believe it's going down. The weekly is also very bearish. Look, take a look at this. That's very, very bearish. We might be correcting towards 1.1660, 70, and then we continue dropping to the next level, which is 1.14. Let me check the 4 hours real quick. Okay, so we have a correction here that is that has started from this level. Let me just take a look. Yeah, we can go all the way up to 1.1660, as I said, and then we continue dropping from there. So that's for now. Now, that's scenario number one. We have another scenario, which is maybe, just maybe, this was a correction. So this is the first leg of the correction, the second leg, and this is the third leg. So we might stop here and continue to go up, but I highly doubt that because inflation is high, interest rates are going to be higher for longer, yields are going higher, and the tensions between US and Iran are escalating again. So the whole thing shows, or like the fundamental story, and technically, it shows us that it might, or it's most likely going to continue dropping against the US dollar, and the US dollar is going to gain some strength against all other instruments. Okay. Is your perspective still the same that gold will go down to 3,800? Now it's stronger than ever, Arif, especially after the break below 4,500 we had this morning during the Asia session. On Friday, it has attempted to break the 4,500, but it failed. But this morning we saw a low of 4480, which is 4,480. And if we manage to close only like one or a couple of nights below 4,500, I think we're going to start to see the big correction happen. We're going to discuss gold anyway, so I was in cells, that's why I couldn't have a question, going through intense emotions. Cells, like, where did you sell, Meza? Okay, so let's move to GBP USD. So same, we had a very bearish close for the week. Daily is also very bearish. We're below all moving averages, and the 4 hours is also correcting. So we might see 1.3420 before continuing to drop. And yeah, that's pretty much it. Actually, I see that this week is going to be somehow easy to read. The market this week, I mean, is going to be easier to read than previous. I hit TPs, still going through emotions. My emotional reactions are opposite. Gold scalping, you hit TP and still going through emotions. Well, Meza, I think something is off. You shouldn't be feeling any emotions. If you hit TP or you hit stop loss, doesn't matter. Like, why are you emotional? You shouldn't be emotional because like everything is planned and everything should be going according to plan, whether good or bad. So you shouldn't be feeling any emotions. Okay. All right. So now we go to USD JPY. Yeah, we got rejected as expected from this area, which is the 155. And yeah, our analysis from the past weeks is actually very, very good. We called almost every move that is happening now. Okay, so yeah, we're very bullish and driven mainly by DDXY strength. Um, let's take a look at the Nasdaq. Okay, so the monthly is still very bullish. The weekly is also bullish. Last week, it closed as a doji because there was uncertainty. But the positive mood that the market was in last week, despite the PPI numbers and the CPI numbers, was mainly because of the US-China talks that happened in Beijing between President Trump and Xi. So I think the markets were like happy with the trade deals that that were happening or being agreed on uh, in the summit between President Trump and President Xi. So that's why we saw a surge in U.S. stocks. But in reality, actually on Friday, reality hit, and the markets understood that, oh no, this is like very high inflation, and this is going to cause us some pain in terms of profit margins. We're going to get squeezed profit margins because higher cost of borrowing, and most companies, as we agreed before, use debt and they use credit to finance their operations. So when the cost of debt is high, that's when they start getting uh, squeezed profit margins. Okay, so on the daily, we closed somehow bearish. That's an engulfing candle on the daily, but it still needs time to confirm. Yeah, for now we're still in an uptrend. For now, okay. So this would be a good place to buy with stops below 28,600. So yeah, it could look something like this. Targeting, sorry, targeting this. So that's a 1 to 2.5, but I'm not interested. Like the risk reward is not very tempting, so to speak, and we have an engulfing candle on the daily, so that's a negative filter. I don't want to be entering against the market. Um, Although I'm not against the market if I enter a buy here, but we have some negative signs. Why would I enter or be in a trade that has some negative signs? Like, I don't need this in my life. I don't need this kind of stress in my life. Okay, Mesa is still training her brain because her habit of delayed gratification, but don't know how to handle instant reactions. Still, I'm training my brain. Okay, fair enough. Hello, Soham. What's happening with your Nasdaq positions? Are you doing well? Yeah, and look, another thing, we have a divergence here. Like this high is higher than this high, but look here, this high is lower than this high. So we started to get a divergence on the MACD, which shows another negative sign. That's why I told you I'm not interested in this trade. The risk reward is not worth it, and the what's it called the daily has like the daily time frame has an engulfing candle, a bearish engulfing, and we have a divergence on the 4 hours. So why would I enter that trade? I'll just wait for another one for a clearer entry or a clearer opportunity in the market in general, not necessarily here. Okay, so yeah. Also here on S&P, we're still bullish. Let's see what happened with Dow Jones. Dow Jones dropped really bad. This is a very bad drop. From 50,200 all the way to 49,100. So almost 1,100 pips drop in a single session. Look, that's the daily. The daily is very bearish, to be honest. And it didn't manage, like Dow Jones did not manage to break the all-time highs as the Nasdaq and S&P did. Now, why did they break all-time highs and not the Dow Jones? Simply because um, there were some tech companies who announced their earnings last week. So and plus the summit in China. So all of this gave some boost to the tech sector in the US. That's why we saw the S&P and Nasdaq, which include very big tech names as components inside of them. That's why we saw them break new all-time highs. Okay. So I think now it's time for everyone's favorite, gold. Let's see what's happening here. Let's see which scenarios are playing out. So yeah, we go to the weekly. Okay, so the weekly closed somewhat bearish. It's bearish, but I would have considered it more bearish if it closed um, a little bit lower, like around 4,500 flat or 45 or below 4,500. But that's still bearish, no problem. Let me take a look at the monthly. Okay, we had this very big monthly candle here, like very negative. And we also had previous month's candles also negative. And now we have a break of last month's low. That's very important, guys. Okay, so I want you to pay attention to this. Look, today, this morning, we broke last month's low, which is very important. So it gives us a sign of where gold is expected to go. So we either have 4,300 as a target, as a first target, but if it decides to go deeper, we're going to see 3,800 to 3,600 area as we've been saying the whole time. So we go to the daily. The daily is very bearish. It broke below this low. It might be just a sweep, but we'll have to wait and see. So what scenarios do we have? You know what? I was expecting this to get here first, and then, so I think this scenario is for now. It's still not like 100% off the table, but for now it's off the table. So I'm removing the triangle formation, and I'll wait to see. So we either continue going up from 4,100, or like we get to this area and we start moving downwards to this area, which is 3,800. So we'll have to wait and see. It's either or, but if we go to this area, that would give us a much bigger buffer to actually buy from a very or like a much better level. I believe this is going to get attacked. This has so much liquidity under it. We're going to get this is going to get swept, and we're going to see some weakness in the gold, and then we continue to move upwards towards $6,000 per ounce. So my expectations, based on historical analysis and based on historical performance of and behavior of gold, the best quarters for gold are the first and the last. So in the middle, we're in the middle now. So in the middle 2 quarters, which is like April, May, June. This is the first quarter in the middle, and then we have July, August, and then September. So those are the worst quarters for gold in terms of performance, and the best are the last quarter of the year and the first quarter of the year. So The first quarter actually did great this year. We saw 5600 on gold. And during the second um, quarter, which we are in right now, we're seeing negativity, and I believe this negativity will continue to show until late summer. After the summer is done, after this third quarter is done, we'll start to see some, or like by the time of like the end of the third quarter, we're going to start to see some positivity on gold, and we might start to see the rally that we're waiting for. So I'm in no rush actually to get in gold now, because historically I know that the best quarters are the first and the last of the year. So I'd rather wait, uh, like banking 10,000 pips, risking very little, risking less than 1,000 pips for 10,000 pips. So that would mean, if not more. So that would mean just like one monster trade a year. I don't need more than this. So that's why we keep analyzing and we stay up to date, not to trade every day, but to prepare for the best or the cleanest shot of the year. Okay. Those CPI and PPI numbers really messed up my plan. Yeah, you should have seen them coming, Soham, because like I've been talking about them for the past month, if not more. I used to only trade gold, and from April to September I made profit, then lost it. From October I started making good profits. Okay. Last year was very good for gold, like there was good volume. I remember. Okay, Arif, let me remind you. The rally started in September, I believe. Okay, so let me show you actually, because I was in that trade here. It was here. Okay, so when did it actually start? It started in July. It started to form in July, and then all the way till the end of August. When did the rally start? It started in September. Actually, to be very specific, September 1st. We started the rally, and we saw it do very well, like till the end of October. Then we had this correction, and we continued to do very well during the last quarter of last year, and last quarter of last year and first quarter of this year. Okay, so what happened between April here and September? Look, this was a range. Do you get my point? And if you go back in years, you'll see the exact same thing happen. Very slow in the middle two quarters, and very good performance in the best and last, on the first and last quarters of the year. Thank you, Meza. Question: these 4,500 and 38 levels, apart from technicals, do they also have some historic significance? Apart from technicals, no, because they're relatively very new. Like 4,500 is a very new number. That's the all-time high that we reached during the last quarter of last year. So like that's a very fresh level. As for 3,800, that's also like a purely technical number, because it's also relatively new, and it serves as a retest area. It serves as a Fibonacci level, and nothing apart from technicals can tell me that 4,500 or 3,800 are good levels. What news right now could push Nasdaq up? Any positive news for the US? Like today, we have nothing. Tomorrow, we have the Japanese GDP, as we said in the beginning. And I think Wednesday, we're going to see the FOMC meeting minutes. That could move the market. You are welcome, Yahya. Okay, so that's pretty much it, guys. Let me just take a look quickly on silver. Okay, so silver is very bearish here. Let me check the weekly. Yeah, the weekly. Look how big the rejection is, all the way from 89 to 75, 76. That's a very big drop. Like imagine from the high to the low last week. That's 15%. Imagine. That's huge. Quick look at Bitcoin. Bitcoin is dropping. We're still, and Bitcoin, by the way, does the or it has the same behavior. It's also the last quarter of the year. Uh, like I don't remember seeing very impressive rallies before the end of the year. All right, guys. And if your trend line gets invalidated, what's the next level for you? You mean Nasdaq? Let me show you. Okay, the Nasdaq, my friend, the Nasdaq, the Nasdaq, the Nasdaq. So if this gets invalidated, this level, if this low gets taken out, we're moving all the way to 28 or 27,900. Okay, that would be the next level. But I feel that you're like you are you planning buys or sells or like I don't get it. What do you have in mind, Soham? Tell me. Okay, so Soham, you can reach out to me on Instagram as always. Very informative session. Thanks a lot. You live long. Thank you, Arif. Thank you. Okay, so to not waste people's time, I'll be waiting for a question on or for your answer on my Instagram, Soham. Okay. All right, guys. So that's it for today. Hope you had a nice session. Hope you learned something today. And good luck trading this week. Stay protected as always. Trade responsibly. And I'll see you on the next one. Take care of yourselves and bye bye.